All right. So, before I get started, if we take a look at uh, what we discussed yesterday. Yesterday, the levels we were watching all week long, we were pretty much looking at was mainly from Monday, I believe the orders were. Yes. They were orders kind of coming in from the dark pool print starting off on Monday. And it was the same levels keep coming in on Friday, on Monday, same levels that showed up on Friday. Dark pool prints ended up showing up on Monday and reclaiming dark pool prints, and significantly in terms of share size, they were significantly larger. They all had signature share size on them, and at the same time they always uh, we were sitting at above average, and today they kind of went into the extreme zone. So if we're looking at today's price action, let's take a look at today's price action just before we start today's class, just to recap what we did yesterday. So if we look at today's price action, what we see and what we notice is yesterday we talked about this dark pool level of 443.34. We were kind of asked to know if these were kind of sell orders or buy orders. And because we had Powell and federal interest rates coming out throughout the week, you see this level since last Friday is a pretty prominent level. On Fridays where we closed off or we held support, Monday started opening it up. We used it as support before pushing up. Tuesday, we used it as resistance before pushing right back down, and then buyers stepped in, pushing right back to that 443.34. So, based on the last couple of days going into today, this level is a magnet. This level is the level to pretty much be watching out for, especially watching at that level at 230. Yesterday, when we were trading, I was told you pretty much wait till 230. You'll probably see this level appear at 230, and it's such a good dark pool print. Off open pretty much was used as support when the interest rate decision came out. We fell towards 441.46, but as soon as Powell kind of came out, this was the beautiful rejection of this 443, and this is in the last hour of the market. The market dumps from 443 all the way down to 438. This is roughly, it was roughly a 50-point move on the options. The contracts went from like $1 all the way to 20. We traded the contracts from $1.80 to like $6-7. The last couple of minutes they just went crazy from this candle down here. But as you can see now, when you ask me if this was a sell order or a buy order, I'm going to tell you it's a sell order. But again, it's kind of too late now that the move already happened. But throughout the week, as you can see, it was multiple times. Buyers and sellers kept stepping in at these dark pool levels. With significant share sizes. So throughout the week, because I was expecting this, that's all I did today. So I wait for this 443. Again, if a buyer stepped in and support formed at 443, I would have been looking for calls to the upside. But price action was bearish today. If you do not use anything, or you just simply use candlesticks, you can tell price action is bearish. With a lot of selling pressure coming in here on the 5-minute candlestick. If we look at longer time frames, you'll see the same thing: selling pressure, dump. So coming into today, this 443 pretty much held to perfect, got destroyed to perfection. Now the way I use dark pool prints is I look at price action at those levels. Sometimes I don't feel like using the time and sales, but most of the times I do use time and sales just to make sure I can see the imbalance happening in real time. But as you can see, same level on Tuesday, rejection and dumped. Today was incredible. It rejected, it dumped. Now coming into today, the way we closed, today is Wednesday. The dark pool prints that came up today, started to come up. They're non-signature prints. They're just dark pool prints. If we look here, uh, this is was at the end of today, so a lot of the ones from 442 kind of coming in today, which was mainly coming from yesterday, the 442.7, and it appeared in previous sessions. But a new one that's coming up right now is this 438.5546. This 438, as of right now, these are all dark pool. They're not signature. So as of right now, they mean nothing to me. But seeing how they kind of come in and play into tomorrow, we'll definitely watch out. Maybe, could be more selling for continuation, or could be, buyers kind of stepping in to push the price up a little bit higher tomorrow before more sellers kind of come in. You got to understand, because these are shares, uh, the move could take 2 days, 3 days, 4 days, however long. With this week, for example, the 443.34, it first appeared on Friday, and the big moves happened on Tuesday and on Wednesday. But Monday was pretty much choppy. But this week also is different because we had federal funds rates and Powell, so it's more gauged on news volatility. So does dark pools make sense based on like what we talked about yesterday, and seeing it come into play today? Does it make sense on why this reaction was significantly larger? Are you able to talk in the chat or no? Are you guys talking in Discord? Yeah, I guess you're talking to Discord. Okay. Uh,
Chat's disabled right now.
Chat's enabled. Yeah, can you guys talk to me in this chat? Take care.
No, I can't even type in it.
Right, now you can chat. Type here. All right, perfect. Nice. Yes. So, in terms of dark pool prints and why this level was significant and why this move was significantly larger, does it make sense? Made complete sense today. Beautiful. All right. Awesome. Today I'm going to go into a different topic, which is the time and sales topic. I do want to give a little bit of a disclaimer before jumping into this topic. Time and sales is, I believe, one of the probably harder things to learn when it comes to trading. Took me maybe 3 to 4 years to fully grasp it and understand it. And I'd be sitting here lying to you today if I told you what is it called? That after this 1 hour class you're gonna be a time and sales wizard. Time and sales takes a lot of practice, takes a lot of time. Today I'm gonna try to kind of show you the psychology behind the time and sales, as well as try to identify certain imbalances. Now, the case study we're gonna use is gonna be from today's session, which is the dark blueprint that happened, because I kind of want to show you what happens at those levels. So from a normal standpoint, it'll take you, 6 months to a year to fully kind of grasp this concept. But with time, practicing with it, just watching it. The only way you can get better at this is just watching it. For me personally, the way I got better is have a chart on one side, have time and sales on one side. And personally, what I would do every day is I would record both the chart and the time and sales after the market finished. I would watch those recordings, just like I'm about to show you the recording I recorded today. I would sit there, watch those recording, and analyze what happens at certain levels, and try to see if the same thing happens over and over again. So there's really no easy way. I do want to explain this, but when I teach it, to students in like a mastermind type of setting, it takes seven to eight classes. Each class is like 2 hours long. So I'm gonna try as much as I can to give the concept and an example with it, and we'll go from there. If you have any questions, I'll be happy to ask them. How do you record your screen? Honestly, Zoom. You just make a new meeting, share your screen and just record it, or OBS. But Zoom works perfect for me because they're dated. I know exactly what happened on a certain date. If a 30-point move happens on one day, I definitely want to watch it as opposed to one that's only at $3-4 range. So yeah. So we're gonna start with time and sales. So this is the time and sales we developed here. So I want you to know everything I'm teaching you here I use. Like yesterday, I taught dark pool yesterday for a certain reason, so you can use it in today's session. Uh, and then we built a dashboard that shows the dark pool. So I use it. I'm everything I'm showing you, everything we're building, everything we do is we use. There's nothing that I'm teaching here that I don't use. So to give kind of a brief background on time and sales, basically tape reading, it's used to analyze price and volume of a given stock. It's pretty much the key to all momentum trading, order flow trading, or tape reading, or level 2 trading, or depth of the market. Is a method that attempts to anticipate price movements based on current orders that are visible on both the buy and sell side. As traders, we use the tape to see where buyers and sellers are waiting. With that information, we can find imbalances in the tape so we're able to make money. So the goal of the time and sale is to find the imbalance. What do I mean by the imbalances? Is where are we more weighted towards? Is it more buyers or more sellers? So before I go into kind of detail on what the time and sales is, I kind of want to show you the time and sales that we're using and try to identify what we're looking at. So as soon as you open the time and sales option on TraderLink, what you'll see is you'll see this bar, this like box kind of coming in. There's a lot of information going on, and there's a lot of codes, and there's a lot of things going on that are different. So first thing you want to look for is the daily volume. The daily volume bar is, I believe, is one of the most important bars on here. It's because if there's a low volume day or you're trading a stock with low liquidity, you can immediately tell by looking at the daily volume. With SPY, a lot of times these daily volume numbers, they're very high. Can go all the way up to 50, 60, 70. I've seen 100, 150 million, and days where it's below 20 million or 30 million. Those days are mainly low volume days, and usually on low volume days, nothing really happens as much. Then you have the opening price right here. This is what the open price of the session is. So when I took this particular screenshot, I believe it was Monday, and the opening price was 433.06. Right here, what we have is the VWAP tab. The reason we have the VWAP tab is because it's always nice to know where the VWAP is, especially when you're reading the tape. A lot of tape traders, once they get completely into the world of tape reading, they don't really look at the chart as often. So having the VWAP here to glance at it, because VWAP is pretty much where volume weighted average price. So where is the volume at which average price? In this particular case, it's at 443.42868. So when we're looking at the time and sales, what you'll see is you will see here the time, basically what time the order was executed. Right here, over here, is the price that the order was executed. Then right here in the middle is the quantity of shares purchased or sold. And right here is the notional value of the order. So for example, when I see an order like this at 11:42 a.m., someone purchased 100 shares of SPY at 441.51, and he paid $44,451 for this order. So this is what we see when we enter the time and sales area. Now, when we're going into the color code section of the time and sales, what you'll see is there's a lot of kind of colors coming in. There's white, there's red, there's green. There's also color codes where they're highlighted codes in red, in green, and in blue. The code of these numbers really matter because the code is going to tell you the psychology of the trader, especially when the psychology of the trader is important when his orders are worth millions and billions of dollars. So once you see an order coming in the green, it simply means the order is being filled at the asking price. So whatever the asking price is, in this case, the asking price is 441.31. Someone is just purchasing shares at the ask price. When you're seeing an order filling between this in white, this means that the order is being filled between the spread. I'm going to explain this one now in detail. And right here in red, this order is being filled between the bid. Now, what does all this mean in terms of let's see. Okay. Yeah, okay. Beautiful. When I create a new slide. All right, so when I mean being filled at ask, at bid, at filled. Okay, so if we go and there's this bicycle. This bicycle or this car being sold. I don't know how to draw, but this is a car. Okay. Let's say this car is being sold and the asking price for this car is $1,000. And I see this car, I like this car, but I don't want to pay $1,000 for it. I'll pay $950. So this is the ask, and this is the bid. So if someone comes and purchases this car for $1,000, he's being filled at the ask. He's giving me what I want, what I want for it. It's being, he's giving me, I want $1,000, and he's paying me $1,000. So he's getting filled at the ask. Someone comes in, says, okay, there's one guy, he's bidding $950 for this car. You're selling it at 1,000. I want to give you $980. This $980 is going to be filled between the spread. This is between the spread. This is the white orders between spread. So these orders that, when someone purchases it at $1,000, these orders get filled in the green. And these orders here at 980 that come in in white, they're between the spread. These orders come in white. And how do I erase all this stuff? All right, beautiful. The orders that come in white, they're between the spread. And then the order that comes in at 950, for example, same level, 950 over here, 1,000 over here. So if someone purchases it at 1,000, that's coming in at the ask. If someone purchases it at 980, that's coming in between the spread. And if someone's like, okay, listen, I'll give it to you at 950. 950 is pretty much the bid. So this is the bid, this is the spread, and this is the ask. So every stock you go and trade, there's always a bid and there's always an ask. So a lot of times you'll see orders being filled between the spread, at the ask, at the bid. In terms of psychology, these orders, they could mean multiple things. When someone purchases at the ask, when it's just one buyer buying at the ask, you know, it's you're just buying at the asking price. For people who are buying at the bid, you know, they kind of want to save a few pennies here and there. But when it comes to a lot of orders being filled at the bid, it could mean that the seller of these contracts does not want to wait for the contract or the price of the stock to go towards the ask, so they're just dumping it at the bid. A lot of times you'll see orders being filled at the bid, creating support because it's just orders kind of coming in, filling the bid and holding it as support. Other times you'll see a lot of orders being filled at the bid and it immediately dumps pretty hard. But when it dumps pretty hard, it always comes with a certain kind of key element that a lot of people fail to recognize. The key element here that comes in is the orders that come in a little bit with this boxed in coloring. As you can see, these orders here that come in with a boxed in coloring, they mean something different. They mean these orders are being filled below the bid. In terms of one order being filled below the bid, it doesn't really mean much. But when there's a quantity of orders being filled below the bid, this is a sign of weakness. It's a sign of weakness because they're trying to exit. So they're selling it below what it's worth. It's the same thing if we go back to this bicycle example, and it's like someone coming in when you see orders being filled below the bid. Someone comes in, you know, they sees, okay, the car is worth $1,000. The bid is 950, and someone comes in and be like, I want to sell this very fast, so I'm going to sell it at 940. It's below the bid. It's going to fill 100%. You know, someone is bidding 950, someone is asking 1,000, and you know, someone comes in and sells 940. It's immediately going to fill. But once we see a larger quantity or a larger momentum of orders coming in below the bid, it's a very sign of weakness. They're telling you, they're pretty much telling you, I really want to get out of this stuff. I'm desperate to get out of this ticker. I want to get out. Take me out. You know, it's a very big sign of weakness, especially if you see accumulated orders filling below the bid. It's like, you know, you probably kind of want to be like, okay, what's going on here? Why is a lot of people want to exit this ticker? It's a sign of panic. You know, I could sell at the bid at 950, but I'm selling it at 940 to get out as fast as possible. And sometimes these orders below the bid, you know, they're pennies difference, so it doesn't really make a difference. But other times you see them come in and they're like, you know, 30 cents difference, which makes a big difference when you're trading sizes of 100,000 and 10,000 shares. You know, it makes a difference. Then these color codes right here that are coded in blue right here. Now, if you paid attention to yesterday's class, what kind of order is it? Beautiful. Signature order. All correct. So these orders, you know, they're larger orders. Sometimes they're signature orders. They'll immediately be filtered in as an order because it's coming on the tape. But most of the time they're just larger orders. Other times they're dark pool orders. In this case, it is a dark pool order and it's a signature order against our beloved 443.3 level. Then right here, what you have is these orders right here that come in a boxed green. These are orders being filled above the asking price. This is a sign of strength. It's the same thing. If we go back into the slide and you see this car is at $1,000 and you see a lot of people are buying it at $1,000 and you offer $1,010. I'm obviously going to sell it to you because I'm making $10 extra above the asking price. You know, this is a sign of desperation also to get into the ticker. Once you see a lot of orders kind of being filled above the ask, you know, it's the same thing. It's obviously going to drive the price up because there's multiple people willing to pay, you know, whether it's 10 cents, 5 cents, or 2 cents above the asking price. They want to get filled. You got to understand, just because you're ask or bid, sometimes you don't fill. So if you put it a little bit above the asking price, you get filled. If you're trying to sell something, you put it below the bid, you'll fill. Same thing with an options contract. You have an options contract, you want to get rid of it, and the asking price, the bid is $1.50. You put it at $1.45, you're gonna get filled 100%. Sometimes you just want to get the fuck out of a position, you know. Sometimes you want to get out of a position. Sometimes you really want to get into a position. I have a really great questions. Can these lead to fake outs? 100% can lead to fake outs because uh you have to gauge where they're imbalanced. If it's 10 guys, all buying 100 shares, it's probably not going to really do a dent. But when you see a plethora, a lot of orders kind of coming in, lining up at a time, which I'll show you right now in today's example, it does drive the price up because more people are willing to pay more uh, 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 than the asking price. I have a really good question here. How much is a lot? It really depends on the stock you're talking about. If we're talking like a stock like Palantir, for example, that trades at $15, a lot could be $100 million worth comes in. So if we're talking about SPY, you would want larger notional value orders to be filling above. But in SPY, when I look at it, it's the momentum and the quantity of orders. I'm going to show you in an example what I mean by that. It's the momentum and quantity. So you see 1,000 orders kind of coming in above the ask or below the bid. It's a sign that these people want to get out. Does the psychology part make sense? Can I go to the next slide? If it doesn't make sense, feel free to say it doesn't make sense. I don't understand. What is the purple orders? This one right here, the purple. Oh, the purple, you're right. Okay. Yes. So there's orders that come on the time and sales that are purple. That just means that the price is approaching VWAP. The price is approaching VWAP. So just a correct summary. Red box below the bid, red bid, white spread, green ask, green box above the ask. Correct. And in purple, it just means price is approaching VWAP. How does this information fit with the footprint, man? I'm going to be honest with you, Galini. I am not a footprint trader. I don't use the footprint. So I'm not qualified to answer that question. I'm not going to sit here and lie to you. That signature order was a buy. That signature order was actually between the spread. You see it's in white. Approaching being within a plus or minus, I believe 30-cent range between the VWAP. Correct. And Dell Warfare. Correct. Let me see, do I have any other questions I didn't go through? So going back to this example, the reason I like to go back to this example is because I'm able to show it in an easier perspective. So when we go for this car again, we're gonna look at it from an imbalance perspective. Okay, say a lot of people own this car and they're selling it for $1,000, and it's a hot car, everybody wants it, and the bids are sitting at 980, and orders are being filled through. When we're looking about imbalance, the imbalance is basically, when we're trying to find the imbalance, it's all about kind of supply and demand. The time and sales is really mainly also about supply and demand. You have to understand, every transaction has a buyer and has a seller. Every single transaction, even those large transactions, when you see 100 million being filled, someone sold, yes, correct, but someone also bought. So how am I able to determine where the imbalance or the selling pressure, or how am I able to? It's this is where the momentum part kind of comes in. When there's 1,000 people kind of coming in and finish their selling this particular car, usually because there's a lot of people, 1,000 being a lot, selling this car, uh, the price of the car pretty much goes down. Same thing that if there's a lot of people kind of coming in and buying this car, offering to buy this car, orders are being coming in and they want to buy this car at the desired price. What happens is the price goes up. When there's a lot of people that want to buy something at $1,000, the price goes up. Same thing when a lot of people say, you know what, I'm gonna go sell this car at $980. I'm gonna take a $20 loss. Uh, when a lot of people start selling this particular car, usually the price goes down. You can find the same car a bit cheaper. Everybody wants to exit this particular investment. It's the same thing with NFTs. You see these NFTs, people go and they buy them. Because people buy them, they drive the price up. You bought it at 1,000, you want to go sell it for 1,500. Someone comes and buys it for 1,500. The price of this freaking picture now is 1,500. But when this particular person goes to try to sell it for 2,000 and nobody buys it for 2,000, he's gonna go sell it for 1,200 and take the loss on it. When he goes and takes that $200 loss, the price of this particular NFT at this given moment does drop because somebody else bought it for 1,200 as opposed to what he paid for 1,500. It's all about supply and demand. Now, it is hard to be able to tell where the imbalance is heading by looking at the time in sales. It's so freaking fast. That's why it is one of the tools you use, with your other tools. For me, for example, with time in sales, I'm pairing it with the candlesticks. I'm pairing it with the price action because it is impossible for my two eyes to catch everything. That's why I'm glancing at the time in sales. So for example, when I'm looking at the candlestick and I see a candle like this, and let's say this is $100 right here, and this is 98. What's telling me when I'm looking at this candle? Oh, there was selling pressure at this $100, which drove the price down towards $98. So when I'm looking at time and sales, I apologize. I'm pairing it with candlesticks because sometimes my eyes is not able to catch everything. And just by glancing at the candlesticks, I'm able to determine if the pressure is buying or selling. So now that we're done with this part, I'm going to go into the case study right now and kind of explain it in the best terms as I can, if possible. Is it a good idea to filter time and sales showing only larger blocks of 1,000 or 5,000? That is actually a really, really good question. Now, if you do that, you will only see larger orders or larger notional value orders. That's why we have on the Trader Link tab a top market orders that kind of come in, and these are the orders that are 1,000 plus, 5,000 plus. Now, if you do that, you get to remove the orders that are 100. You remove one key element to tape trading. The key element that you remove is momentum. Those smaller orders, the beauty about them is they tell you momentum. Those small orders, they are, kind of one of the heartbeats of the market. They are needed because that's how you're going to gauge where momentum is leading to, because you're going to see orders that come in, 100, 100, 100, 100, 100, 5,000, But if I only see this 5,000 order, I'm not going to be able to see what this 100 order is. So how I do it, I have 100 over here on one side, and I have 1,000 over here. And this 1,000 plus, because it's a slower time in sales, it's going to show me all the orders above 1,000, above 5,000. Exactly how Endel Werfer said, 100 orders of 100 versus one order of 10,000. And those 100 orders of 100, you see them so much. And in the end, they're the same kind of notional value, but the difference is the 100 orders is going to show you momentum. It's multiple transactions. It's not one person going, okay, here's 10,000 shares. It's multiple people going, back and forth, trading with each other, 100 orders, 100 orders, 10, 10, 10, 10, 10. So the smaller orders is how you're going to be able to gauge momentum. The larger orders is how you're going to be able to kind of gauge where the direction is headed at, because those larger orders is what's going to move the market, because you're going to be able to look, okay, this guy just sold 10,000 shares below the bid. Okay, so this big guy, big whale, he wants to exit the particular stock, with very fast. And then you look at the 100 guys, oh, they're also all exiting. They're also all selling. They're also selling bid below bid, so the combined total of both together, you can say, oh, the imbalance is shifting to the sell side, So it's building momentum. You wanna know where the momentum is. How are you supposed to trade the open when the first order right off the bat, I'm gonna have to sit there and wait for someone to come and buy 5,000, 10,000 shares. I want those lower guys to kind of come in and push the market up, because not every time you're gonna see a big guy kind of come in with those larger shares, especially the really big guys. What are they trading? They're not going to trade on the open market. They're going to trade dark pool. If I can hide my order and I don't have to show it to you, I'm going to trade on the back end, because I'm going to show it to you 24 hours later. So the way I personally filter it, I have 100 filtered, I have 1,000 plus filtered, but also there's a tab on TraderLink that's going to show you the top 10 market orders that are coming out in real time, which is pretty much going to show you everything from 5,000 plus. So because we have all these tabs to fit the style of trading that you like to trade, there's so many ways you can kind of rearrange the dashboard. So does this make sense? You look more into time and sales versus level 2 data. Which would you prioritize? That is a beautiful, beautiful question. So I usually pair both together, but at the moment we can't, because we're not a brokerage firm. We can't add level 2 data. But what I found has helped me even better is what the problem with level 2 is. Level 2, they're limit orders. They're limit orders. Diamond sales, they're executed orders. Can anybody tell me, if I have a limit order and I have an executed order, what can I do with my limit order that I can't do with my executed order? Beautiful. You guys are smart. You guys are much smarter than I thought. You can cancel the limit order. You can change the limit order. You can hide the limit order. You can spoof the limit order. A limit order is simply an order. Like, for example, when we were doing the short squeeze on AMC, AMC, let's say, was trading at $70. You saw limit orders up there at $1,000. I ain't selling AMC till $1,000. I'm not selling till $1,000. These orders never got filled. They were limit orders. You open the time and sale at the level 2, they were there every single day. These limit orders were there every single day. Just because it's there doesn't mean it's gonna fill. It's just there sitting on the time and sales. Now, level 2 is good to be able to kind of find the support and resistance, but with time and sales, they're executed orders. Because this is a time and sales class, I'm going to go over the benefits of time and sales. So with time and sales, every order that you see on the time and sale has been executed. The only way for me to go and change it, to spoof it, to hide it, I'd have to go through a dark pool route. To change it, I would have to go and do the opposite of what I did. If I sold it, I have to buy it back. If I bought it, I have to sell it to be able to reverse that transaction. So everything you see on the time and sales has already been executed. I cannot change anything. I cannot do anything. Whatever I see on the time and sales is already there. With the level 2, I can change it all day long. I can sit here and show you, okay, I'm going to buy 1 million shares of SPY at 440. and SPY, let's say, is at 440.4. When SPY comes to 440, I remove my order. I'm no longer there. There is no more, what is it called? There's no more support here at 440. You'll see immediately SPY drops. So level 2 is good. Yeah, I use it, but lately I've been pretty much focused on how I can use time and sales with momentum, because at the moment, our trader link does not support level 2, but we're looking to kind of add it down the line. But we do have footprint, which is similar to level 2. So let me look now. Big whales could do that to direct the market. Just throw a converse idea. Level 2 is good to look for sell and buy orders that might be serious orders, but small distinction. Have you ever seen someone target those limit orders? They see it and they send in a huge order to break it. Oh yeah. Oh yeah, bro. A lot of times when I'm trading on the options market and I set up limit orders, a lot of times they'll fill them just to stop them out, or they'll go close to the limit order, they won't fill it, and then they'll push it up. There's a lot of ways limit orders could be manipulated. Market makers, they can see everything. They can see level 3, level 4, level 5. So they can, if they want to take you out, they can take you out in a heartbeat. Liquidity sweeps. Yep, you're right. So so the main goal pretty much at the end of the day with the time and sales is to find and identify the imbalance. Selling pressure equals imbalance to the downside. You'll see larger sellers, you'll see more selling in notional values, you'd see orders being filled at the bid as it trends down. All the times you'll see orders filled below the bid. Buying pressure is the same, they're imbalanced, buyers to the upside, larger buyer, more buying in notional value, orders being filled at the ask as it trends up, so can't believe ES is down 10 after hours. Yeah, bro, it's that dark pool level. They sold the shit out of it. Now, what we're gonna do is I'm gonna take you to today's trading session, and we are gonna try to analyze it based on what we see. I'm gonna try my best to make this as easy as possible. It probably won't be easy, but we're gonna be okay. So I'm gonna play this, and I'm gonna go all the way to 230. Uh, can you see like this perfectly fine, or is it too stretched out? Looks good. Good load. Load it up real quick. 1 second. You can see everything. It's all good. All clear. All right. I'm just trying to skip a little bit. So now this is what we see pretty much when we're trading time and sale. I have a question here that says, why are there two time and sales panels? The one on the left-hand side is filtering orders of a 100 plus. The one on the right side is showing all orders above 1,000 plus. So again, this is the ones that we're going to use for momentum. And this one right here, we're going to watch to determine where the psychology of the big boy trader, the big boy whale, what is he doing? Because hand in hand, we're going to be able to kind of determine the imbalance. Now, if you're going to sit there with a calculator and determining where the side is which side is bigger and which side is smaller, it's what is it called? It's going to be a bit harder. You know, it's all about kind of glancing with your eyes and pairing it with the chart side by side, so you can pretty much tell where the imbalance is headed. So I'm going to show you one case study. I'm going to explain to you what I saw today with the dark pool level, and then we're going to go from there. The first thing you want to look for when you're watching the time and sales is you want to look at the daily volume. You want to see how much is the daily volume increasing as we're pushing up, as we're pushing down. So right here is 2:27 p.m. before Powell speaks. Usually when Powell speaks, as soon as he kind of comes on, volume spikes, you get a little pump very fast kind of come in, and then then you kind of see the main move start to play out slowly. So the level we are looking at is going to be 443.34. The reason we're looking at that level is because that was the dark pool print from the previous day. That was the level we're watching. And if you look at where the VWAP is headed, the VWAP at this particular case is also 443.36. Can anybody tell me why the VWAP and the dark pool print are the same level? Any guess? Any educated guess? VP is a lot of volume, large order quantity, most volume traded there. Volume, beautiful. You guys are on fire. So the VWAP is there because that's where lots of the volume for the particular day or the liquidity for the particular day for this session is, which becomes which is RDP, because that's where the notional value of orders are there. So beautiful. So when we're watching this, my eyes are on volume. I want to see if voluming is continuing or it's decreasing. Now, usually in theory, I mean, sometimes, you know, different cases, you know, it's different, but in theory, you know, as the market is trending to the upside, usually you tend to see larger influxes of volume. As the market is trending to the downside, you see less volume because there's no more buying activity. It's mainly selling. So you tend to see lesser kind of volume kind of come in during sell times. Now, they kind of go hand in hand, because sometimes you see the market pretty much pushing up on low volume, and then you kind of see a huge fake out and it kind of dumps. So volume is a very important element when you're watching the tape. There's a lot of ways you can tell if the day is going to be bad, is just by looking at volume. You know, when the volume is below 15 million on SPY on a given day, just don't trade that day because it's probably going to be choppy. If you see high volume days, 30, 40, 50, 60, 70 million plus, these are days where there's a lot of volatility going on. Could there be large volume on sell days? Yes, there could be large volume on sell days, because as the market is going up or down, there's a lot of volatility going on. So yes, there could be also large volume on sell days, but you want to look at the volume. In this particular case, the volume is sitting at 32,700,000, and it's climbing in this particular case. I mean, let's kind of watch. Let's kind of watch and see. How do you know about volume during the first 4 hours? How much is it going to have? I don't know how much it's going to have. I just look at it. You know, you can tell by looking at it. Like in this particular case, you know, it's 230. There's 32 million volume. Volume is kind of average for the day. The reason volume is kind of average is because Powell hasn't spoken yet. When Powell starts to speak, the volume starts to kind of go higher. Now, when Powell is speaking, for example, and you notice a little bit of a trigger push in volume, for the market to keep going, from 44.43 to 44.44 to 44.45, 44.46, you need volume increases at all these levels. So if you see volume go from 32 million to 35 million and it pushed like $1 up, and you're expecting it to go from 44 to 44.45, you need the volume to go more from 35 million to 45 million to kind of keep pushing that momentum up. More buyers coming in is gonna drive the price higher. So this is 2 minutes before Powell starts. You're seeing a lot of orders kind of coming in. This is the reason why we keep the 100 tab open as opposed to only keeping larger orders coming in. Because as you can see, the smaller orders, many orders are coming in. And then you look at the larger orders, I'm not seeing much coming in. Nothing is really coming in. When you center the two models, we can only see the 1000 plus side. Like this. Like this better. Oh, I'm good. Okay. So, as you can see, the larger orders, the 1000 plus, there's no activity going on to it. There's nothing really happening. It's just no orders are coming in. So when someone asks me, oh, why do I just have to keep the small orders? Look at the small orders. You're seeing orders kind of being moved, a lot of orders being filled at the ask between the spread. Right this second, you're seeing orders kind of filling above the ask. And from an imbalance perspective, when you look at something like this, where it's a bunch of boxes kind of coming in, what is it telling you from an imbalance perspective? What is when you look at something like this from an imbalance perspective, what do you see? Filled all at ask and above the ask. Larger, multiple orders kind of coming, people want in. This is at 2:28 p.m. 2:28 p.m. Now, you have to also understand when you're trading the tape, a lot of these traders that are trading the tape, they are scalpers. You have to understand, if I can make 20%, 30% in a few seconds, I'm gonna go in and out, fast. So a lot of these moves happening on the tapes, they're 1, 2, 3 candle tapes. But in order to kind of find the bigger picture kind of thing, that's when you're going to use the candlesticks and price action. But a lot of these orders that are coming in right now at this second, what you're seeing pretty much bullish action, imbalance towards the buyers. People are slowly accumulating orders to kind of jump in. So let's just see. Again, you see these orders here being filled at below the bid. But mainly the orders kind of coming in at this given second is all buyer orders. Accumulating shares, slowly accumulating shares, as you see. Buyers kind of coming in, accumulating shares from what I'm seeing at the second. And this is literally 20 seconds before Powell starts, as you can see. Now orders are being filled, below the bid. Right this second, really nobody really trades during 30 seconds before Powell comes on, because mainly, these first couple of minutes, they're mainly fake outs. They're mainly kind of faking people out. Now, I kind of want to sit here and look at the bigger picture in terms of notional value. The orders that I'm seeing here coming here in front of me on the larger side, in terms of an imbalanced order, where is it more imbalanced at from the bigger picture? Those the larger notional values here, is mainly large orders coming in and selling at bid. These people here are pretty much, I kind of want out. Yes, we do see some orders that are coming in, buying orders, but the larger, significantly larger orders, are mainly imbalanced to the sell side. So momentum, also accumulation of sellers pretty much selling below the bid as we push up. You see, we're currently pushing up, but the accumulation is mainly sellers accumulating. And then it's 2:30 comes in, Powell comes in, and you get your OG pump as soon as he walks in the stand. You'll see it happen right now. You'll see what happened, and this is where like a lot of most people do get trapped in these areas because they're seeing selling pressure kind of coming in, and then boom, out of nowhere, Powell walks the stage, and you'll see the market pretty much pump 10 points right off the bat. This is where people are, oh, let's buy calls. Let's buy calls. And you're seeing it pretty much right now happening in front of you. When it was imbalanced to the sell side, in notional value, those orders were significantly larger. Now, as we're pushing up here slowly, many of the orders are seller orders, even if we're pushing up. Yes, we have now imbalanced buy orders kind of come in, and they immediately push the price. They're trying to push the price above 443, but as soon as it approaches that 443 level, we're seeing a significant amount of orders kind of coming in, and they're mixed. You got buyers, you got sellers, you have no idea what's going on, but we're pretty much at VWAP, and we're pretty much approaching that dark pool level. Now, as you see, as soon as we approach this dark pool level, what happens is you get a shoot in volume immediately, and you get a speed. Look how fast it is going fast. Like you have no idea what to pretty much expect. But as soon as we approach these large numbers, 443.5, 443.45, what you're seeing is you're seeing immediately the price being brought down by the momentum of sellers immediately pushing it down. It wicked at 443.5 immediately down 20 cents. Now you might not see the 20 cents as a lot, but 20 cents when you're trading SPX is two whole points. And people who trade option contracts, that IV spike is so high on these 2 points, as you can see. Notice one thing, as we are technically pushing up, what you see is volume volume is not really holding to par. Like, oh, it went up by 1 million. Oh, too bad. It's not like, oh, it went up by 5 million, 6 million, where buyers are kind of stepping in. You're seeing as we're approaching these higher numbers, 443.6, immediately the imbalance is shifting towards the sell side because they're immediately pushing it down. As you can see, multiple orders kind of coming in, all seller-based orders. You can see in terms of quantity of orders kind of coming in. I know this is hard to understand from a first perspective basis. I know it's not easy to read the tape, but I'm trying to do my best in explaining it. And you're seeing now a lot of these darker pool orders kind of coming in, being filled between the spread. So now that's at 443.6. You expect it to kind of continue because it's technically holding that dark pool level. But what you'll see is as soon as we approach these higher levels, the momentum has to increase like that. So you saw when the speed of the tape was increasing. Once we break these certain levels, the speed needs to keep picking up. It cannot cool down. The second it starts to cool down, the second you immediately start you start to wonder, oh, what's happening? The momentum isn't there. Because in order for the market to push up, I need momentum. I need volume. In order to need volume and momentum, you need the speed to start going heavy and flip an imbalance towards the buyer side. But what you're looking here, as soon as we are approaching these higher levels, 443.6, you're seeing a larger quantity of orders kind of coming in, and they're all selling below the bid, They're not selling at the bid. The bid is 443.64. As you can see, this is the bid right here. I'm selling 2 cents below. Every single order of right here is trying to sell slightly below the bid because they're trying to exit this underlying asset. So every time we start to approach these higher levels, you see a large amount of sell orders kind of come in. Yes, there is also buy orders that come in above because there's two biases to this. Someone who buys is losing. Someone who sells is winning in this particular case. There's always a winner and a loser. So we have to kind of follow the winner in this particular case. So what we're looking is we're trying to find areas where there is kind of imbalances and selling pressure kind of coming in. I want speed. I want fast. And if you see it slow, going slower, you can sit there and actually read what's going on. Understand what's happening is an accumulation phase. Basically, buyers and sellers are selling to each other, and there's no kind of direction. But I'm at that dark pool level, and I expect a lot of price action to start flowing at this level. So this is the level where I'll start to watch everything kind of play out. So I'm pretty much just watching. I'm trying to determine where is the pressure kind of coming in. And based on what I can see, if I look at any chart, I'm going to see wicks. I'm going to see wicks. On the 1 minute chart, I'm just going to see wicks above that 443 because it's going for 20 seconds, immediately being pushed back down. As you can see, it's approaching, pushes down. And you're seeing the majority of these orders are all below the bid. I want to get out. I want to get out. I don't want to be in this. Majority of the orders coming in, as you can see, speed of the orders coming in is all more selling pressure than buying. And we'll sit here and we'll watch it all go unfold. Now, when we approach even numbers, like for example, in this case, 443, when it's 443.00, you're going to see a lot of activity at these levels. If that 443 even number kind of rejects, you're going to see it immediately start filling at 0.90, 0.80, 0.70. If you're in puts, that's exactly what you want to see. If you're in calls, you want to see it, hold at 443 and orders starting filling above that 443 level. So as you can see in this particular case, because Powell is speaking and because it's news driven, there's a lot of biases. People look at the news, oh, this might be bullish news in terms of my bias. People look at the news, this might be bearish. So there's a lot of activity and action going on. But what I'm looking at the volume. Volume is weak. Volume is weak. It only went up 2 million. It's pretty weak. And as you can see, orders are being filled, below that 443 level, slowly getting filled below that 443 level. And as a trader, you want that to happen. You want to see orders being filled at 443, and then if you're in puts, you see it again, kind of hold that 443 level. You start to get a bit of, what's going on. I know that this 443.4 level is going to be tested multiple times before it makes a big move. Before it makes the larger move, this level is going to be tested multiple times. That's why as a trader, there's always multiple entries you can enter on a particular stock. There's not immediately you're going to enter as soon as the market breaks, especially with the tape per second. It's literally per second. You see, as soon as it held 443, it goes to retest that 443.34 level again. And as you can see, it rejects it again and again. So yeah, as soon as we approach that VWAP or that 443 level, which is that the dark pool print, you tend to see momentum start picking up. Basically, the speed of the tape start picking up. The imbalanced orders, you can kind of tell. Like right now, as of right now, I see balance. It's balanced. I don't see any imbalance. At this level. Right this second, I don't see any imbalance. I see buyers. I see sellers. But room like this. A wave of sellers comes in, a wave of buyers comes in, another wave of sellers comes in. And now the buyers slowly, less buyers, more sellers. It's just who's more. You're basically trying to determine where is more is Is there more buying pressure or is there more selling pressure? That is the ultimate goal when we're looking at trading the tape. Where is the pressure? Is it leaning more on the buying side? Is it leaning more on the selling side? And that's why I tell you practice makes perfect. No way you're gonna walk out here. I understand this, man. Tomorrow morning I'm gonna put $100,000 on a trade because I know how to learn to do the tape. No. You have to what is it called? Watch on a daily basis and slowly take notes. Okay, today I saw this happen at this particular level. Let me go study the chart. What happened at this chart? This is a practice makes perfect type of situation. As you can see, multiple sell orders start to come in. This is where personally I started entering puts, you know. Can you go to 4:44 p.m. where there's a huge drop? What? 4:44 p.m. the market is closed. 2:44. As you can see, my brother, it's 2:36 right here, and because the video goes in order in exactly almost 8 minutes, 2:44 p.m. will come. Relax, man. It's coming in order. Safe to say, the more red we see ourselves. Degen NFTs. The answer to your question is yes and no. No, because sometimes when we see red, it could mean buyers are holding, coming in as support. So basically, unfortunately, this session is time and sales has a lot of kind of levels to it that I have to go in a lot more detail. I'm kind of just showing the bigger picture today with today's training session. But I do go I will go in more detail in later webinars if we do them, or later masterminds when we do them. As you can see here, you know, those orders are more imbalanced, or imbalanced. The reason I'm not skipping all the way to 244 is where the big sell happens, is because I want to show you the accumulation. You know, you want to see, you know, when something is pretty much just sitting in a chop zone. So when we're looking at it from a chart perspective, when something is simply ranging between two levels like this, you know, before it makes kind of the bigger move towards the downside, this is simply, you know, 15 minutes where it stays in this kind of range. It's very important because these shares are being accumulated. You're searching for the imbalance here. Sometimes, man, the move will happen right away. Sometimes, you know, the move will happen right away and you'll get the move. Other times, bro, the move will take maybe 5 minutes, 10, 15 minutes to develop before it kind of goes through. You know, it's all about, you know, how long it could sit there and base for 15 minutes. It could sit there and base for an hour, you know? So, yeah, it's basing. Base before the move, base move, so on and so forth. Yeah. So, yeah. So, we entered the trade right here. We entered the 44.20s around this area right here when it went to 443.74 because of the amount of selling pressure that I saw came in. And, you know, our stop losses were pretty much as soon as this 443 held, that's where we were going to go. And let's be real, this is the last hour of the market. So the position was sized for zero, because realistically, if it's two candles above this 443.34, those contracts are down 60-70%. So in this particular area, unless you're buying 2, 3 days, 4 days out of 4 days to expiration, you can kind of follow a 20% guideline stop loss. But because this is ODT and it's the last couple of minutes, when it comes to sizing your options contract, you probably want to size it a little bit on the lower side. But yeah, this range, this chop, this basing, you can kind of tell it from the time in sales, because you're looking at the time in sales, it's approaching 443.6. As soon as it gets to 443.6, immediately gets shut down. Immediately gets shut down with a large amount of sellers kind of coming in, and a lot of imbalanced sell orders below the bid kind of coming. You see every time. Yes, there's buys, as you can see, 3 buys, but 8 sells coming instead. And then at the same exact time, you're looking at these larger orders right here, because one order of this is like 100 orders of those, and those larger orders that are coming in, are 500,000, below bid. So in terms of imbalance, looking at here, you should probably start positioning yourself for a large kind of sell move, especially because the 443.34 had 30 plus signature prints. If you don't know what 30 plus signature prints, watch yesterday's class, and that will kind of be a bit more explanatory for you. So let's continue a little bit back to the time and sales, because you can see my time and sales screens, correct? Yes, okay. Because I'm definitely going over time, but I'm gonna go a little bit slightly over time. It's okay. Doesn't matter. So the imbalance notional value, as I'm looking from here, is mainly on the sell side. The imbalance in momentum. Just look how many keep coming in. One buy comes in, 30 sells come in. The imbalance momentum is sell. The imbalance in notional value is sell. So technically, based on what I see in front of me, and then I have that dark blue print right there, that I know there's a larger moves coming in, is like a beautiful recipe for a nice kind of side to the puts. Now let's see till 244. I mean, if you want, I can give a little bit of a skip, because it's just the same thing over and over. Accumulation, it pops up there and comes right back down. I'll skip it a little bit here. We can go to our 244. You'll see the same thing kind of happening over and over. And then at the same thing, you'll see these larger notional orders coming in, and they're all being filled below the bid. Now we're seeing 1 million or 1.6 million, 1.3 million, 620, 487, 700, 500. Now the difference here, look, the difference here is now we're seeing multiple large notional orders. So we were seeing momentum orders on the left side where it's 100, but now we're seeing larger orders. Look at these orders: 2 million, 500,000, 1.6, 800, 400. I don't want to be in calls here. Look at this shit. If everybody's selling it, and if this big boy right here is panic selling 1.6 million below the bid, why do I want to be in it? And his friends are selling with him. Sure, one guy is buying 487,000, but look, all of them right here are sells in notional value and in momentum. Both now. I got both together, hand in hand. So I'm pretty much watching the price action. We keep ranging between this 443 and 442.9 level. Let's skip a little bit. Pretty much doing the same thing, just ranging between these two levels. I'm in puts already. I can tell the imbalance is sell. The move still didn't happen. It's accumulating. These shares are accumulating. Volume is also picking up slightly as we're going down. It's not picking up because when it's calls, you see this volume go from 36, 45, 45, 50. You see it go up aggressively high. Here, it's picking up, but it's on the lower end. In terms of average volume per day, it's still considered low on the lower end when we're looking at it from a per day perspective. When we're looking at it from a per minute perspective. Now, how do you know it's low volume per minute? This is where, I'm going to pick up my chart. I'm going to add a volume average indicator on a minute basis, and I can see that, okay, when I'm at this 443 on a minute basis, you can see the volume. Where did it go? You see the volume is slightly above the minute average, but it goes below. And then when the large sell comes in, you get a little bit spike in volume. And then you get a kind of a bear flag where per minute it's low volume. And then you get a large push. You get that spike in volume again, So the volume is fantastic, but like when the market's pushing up, let's find a day where the market kind of pushes. See, as it's pushing up, for example, here, it keeps, you get these volume pops every once in a while, as with each candle that goes up, you get 2 candles, 3 candles, more volume as it's pushing up. Then you get a huge spike in volume. And then as soon as the volume kind of dies off, you see it kind of push right back down with it. What is the average daily volume on SPY? Well, the beauty about it here, bro, you go average volume today, 82 million. Average is around 72 million on a daily basis. 72. So while we're trading here, half the volume of the day at 36 million didn't even come out yet. The volume increased as we started dropping. But these larger days where you see the market kind of give a move where it goes from 442 all the way to 448, on these days volume shoots up all the way to 110 million. This is why I'm telling you, when the market's really about to push up heavy, and especially with Powell and everything is bullish, you see a large amount of volume come in to pick it up. When we were at 442, 443.34, when we were right here at these levels, right here where it's holding above that level, the candle is closing above that level, 443.63, volume was shooting down. Selling pressure was going up because the amount of selling orders coming in, pushing the price down. Sell order come in, push the price down. This is what's creating the wicks. When you see those wicks come in at 443.74, and then you see a lot of orders coming in, selling below the bid at 443.70, 0.68, 0.69, 0.64. Those are orders below the bid. Those are what create the wicks. If they were buy orders, if they were strong orders, you would see support pick up. As soon as this wick comes and forms and it drops lower, you see buyers step in at 443.61. In this case, what you saw is orders being filled below the bid, get me out, as opposed to let me hold the price and pick it back up. So this is what I say when you hear gurus say break and hold of the level. This is break. Technically, yeah, it did break the level. It did break 443, but it didn't hold because immediately, as soon as it went above 443.6, a large amount of sell orders in terms of imbalance started to come in. Let's go back to the presentation. And you'll see now as it starts to sell, you'll see how fast it starts to go. So you're seeing those large momentum orders right here. This is, I know you can't really see it, but it's $4.6 million, $2 million, 1.9 million. This one order right here, this $2 million orders takes out this, takes out this, takes out all these sells, 1, 2, 3 buys. This one order takes them out, blows them out of the water in terms of imbalance, in terms of notional value imbalance. Yeah, below the bid, that motherfucker went out, bro. It's the same thing. Your name is DGen NFT, bro. Once you sell below that bid on your shitty cow picture that you bought for $1,000, you want to get out at 800. You drop the floor price. You don't see that floor? When you go and you sell under the floor, it goes down. The floor goes down. It's the same exact thing. This is the same person, but he wants to get out of SPY. And what he's going to do is push the price down with it. He's $2 million. He's $4 million, right now, me and you, right now, we can go on any NFT and bring down the floor from 1 ETH to 3 ETH. At the same time, we can take an NFT and take the floor from 1 to 5 by bidding it up. As you can see, we approach again that same level, 443.3, one more time, you see a large orders of buy orders coming in, but immediately sellers come in and shut it down. 10, not even 10 seconds later, immediately, boom. You want to buy, boom, let's go sell and bring it right back down. Right here is a beautiful entry you can enter because you're seeing that 443 is not holding. As soon as it's going 443, it's immediately being brought down to 443.10, which is 2 points on SPX, by the way. It's not a little bit. Each 10 cents on SPY on SPY is $1 for SPX. So when SPY drops $1 in 5 minutes, SPX is dropping $10 in 5 minutes. So you're seeing it push to 443.34, then immediately push down to 443. That's 3 whole points. That's 3 whole points that SPY is dropping. As you can see now, under 443. You just want it to be under 443 and hold. You want to see a plethora of orders coming in, filling below 443. As you can see right now, 443 is currently holding a support. And now there, slowly, they want to break that support level. You'll see it immediately start pulling down 0.9, 0.8, 0.7, right this second is going to back to test that 443.3, but as it's going to retest, as it's going to retest, what you'll see is the speed. The speed is very, 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 very important. The speed of the tape. You see, it's going to retest, but it's retesting slow. It's going up there slow. If there's buyers, I promise you, you will see them at the tape because this shit will go fast and they'll come in very, very fast. You will see them. You're like, oh, wow. Boom. You see sellers slowly coming in immediately. 443, dump it down. 0.9. You see now that bid slowly going down. And all the orders now also being filled between the spread is main. This is what you want to see. Inputs, and I see this wave of orders coming in because these imbalanced orders here are all sells. And a lot of the white you see, by the way, it's just like a seller, finishing up his sell orders, or a buyer finishing up his buy orders. And usually, I don't know what it technically is, exactly. But if I see like 6 sell orders in a row, then I see a white, I could probably say, okay, this is a sell. We need a speed gauge. Watch, but now you'll see how fast it goes when we sell. You'll see it. It'll go very fast. So it's technically slow right now as we're pushing down, but 443 now is no longer holding. And, orders are still imbalanced towards the sell side. It picked up later throughout the day, actually. It took so fucking long to make the fucking move today. It was slow in the beginning. Still imbalance, sell, imbalance, sell, 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 sell. The psychology of the trader is mainly sell. Okay, a little bit of buys here and there, but it's mainly sell. There's more sellers than there are buyers. The notional value of those buyers, of those sellers, is way higher as well. Finish now. Now sellers pretty much have in control. We're below 443.34. We rejected it more than 5 times on the tape. We rejected it more than 5 times on the chart, and the imbalance is just to the downside. I can now sit here and say, okay, this 443 is probably a sell DP with 30 plus signatures. There we go. Look at them. Look at them. Look how it dumps fast from 442.7 to 442.1 in literally seconds. Dumps fast. Buyers trying to come into, you gotta understand, you will always see buyers as it's dropping. You'll always see buyers because the buyers want to push the stock back up. They'll do anything to push the stock back up. That's why they'll tell you bulls need to defend so and so level. If they're not gonna defend this level, it's gonna go down. Yep, trying to catch a falling knife. Perfect. So as it's coming in, they'll start to push the price a little bit higher to bring in more buyers. But if you look at the overall picture, if you look at the overall notional value of these larger orders coming in, they're all sells. They want it to go down. And now that I'm seeing all this below the bid, and then I'm seeing whites, these are probably sells too. They're just sell orders finishing their orders between the spread. If I can get a better fill than below the bid, I'm gonna get it. You know, like this order right here, you know, 442.16 below the bid. If I can get a little bit of 0.24, which is 10 cents, which probably doesn't make a difference to you and me, but if I'm buying $707,000 worth, those 10 cents will add 10 grand. It'll make a difference. So as you see, the whole notional value, the entire selling pressure is all bids. Everything is being filled at bid, below bid. So the entire market is now pushing down. And it goes like this for the entire hour and a half. And you see it. It actually picks up at the end of the day, even a lot. Volume goes crazy. You know, around 3:30, but I don't have that part recorded because I was making this presentation for you guys. Yeah, this is where I'm gonna kind of conclude the time and sales portion of the class. And as you can see, imbalance. Look at the imbalance. Look at these notional values. You know, unless a large buyer kind of comes in to step in to push up the price right here, which they do come in to $3 million worth, 3.5, but the guys above him are way more. You know, the guys above him are way more. And now it sits there and it ranges again. It creates a bear flag. But once we're at these levels down here, this is where, you know, we got the gist of it. Okay, these are sells, the imbalance is towards the sell. This is where, as a trader, I can flip back to the chart, and the chart is going to help me determine what's going on. If I look on the 5-minute, for example, you know, rejection keeps coming down. But on the lower time frames, you know, oh, okay, it's creating a little flag right here, for example. Creating a little flag right here. You know, price action drops again, creates another flag right here. Drops again, creates another flag right here. You know, it's this is where you start to kind of use price action to help determine the level. They finished. The level was a sell. It's going to continue pushing down, and then it's yesterday's support right here just gets absolutely blown through, and it creates another bear flag. It's probably going to go down more. You know, these were sell orders. If you look at the time and sales from the trader link, when we go into dark pool, as of right now, as of right this second, when we look at the Apex dashboard from today, there's no dark pool orders coming in at those low levels. 438, a little bit. Based on what I'm seeing pre-market, these could potentially be 438. Could be an entry for us for more puts tomorrow. So right this second, I'm not seeing any form of buying pressure pretty much coming in. So we'll see what tomorrow brings us. We could potentially see more continuation if more buyers kind of step in on these dark pool prints and show new dark pool prints of potential supports and the imbalance on the tape is shifting and you know, price action looks good. you can do that, but from a dark pool perspective and from a time and sales perspective, damn, I went off by an hour and a half. I'm sorry. I'm sorry if the class went a little bit up. I've never really followed time frames, if I'm being honest with you. But yeah, this is pretty much where I have to conclude everything. As much as I'd love to go in more detail, I do go in more detail, you know, when I have an entire mentorship surrounding this process. But because this is, you know, by TraderLink, and we're working with TraderLink to kind of give you what the platform pretty much offers, I can only go through these topics. If you want to learn more on a heavier base, maybe once a year I do one of these classes where there's like 30 people and it's like 2 months long, and I have more time to go into more depth and detail. But I just wanted to show you kind of the bigger picture of time and sales of dark pool and how you can use it. I mean, if you used it today, bro, these contracts went from 1.8 to $19. I sold at 6. I'm not gonna sit here and tell you I held to 19. I actually sold at 6. You know, 250% was very good for me. You know, it's more than enough. But yeah, those contracts went absolutely crazy. Let's see. Tomorrow we might see a continued move to the downside. At right this second, I don't know, because based on the dark pool prints that I see in front of me, I don't see anything. Maybe tomorrow I'll use Gamma or Vanna to help determine where the trend is, and that's where Sheen and Geo is gonna come in and kind of show you how to use the Gamma and Vanna explosion. I really think those classes, you know, paired with everything, you'll definitely make more informed trading decisions. Where can I get last night's recordings? It's posted in the Discord. I also apologize for the crazy fiasco you saw. Uh, uh, I didn't know what to do, but that was very unexpected. So I apologize for that. But yeah, I believe tomorrow is how many contracts of the 4420? I believe I got 100 today. Put 18,000 into the play. And I sold at different levels. Actually, let me check what levels I sold. I sold a lot. I'll tell you the reason I sold a lot in the beginning, because this chop shit where it sat there and accumulated shares, it took so long. It really took so long. I tell you what prices I sold them at. 1 second. Ah, okay, let me see what prices. Activity. So I bought first time 80 contracts at 1.8, and then as it was kind of ranging, it went from 1.8 to like 2.2, 2.3, but I wasn't really satisfied with the move. It's like 30, 40%. And then I bought 20 contracts at 1.75. And then I sold at 3.2, 30 contracts. And then I sold again at 3.6. And then I sold again at 3.7. I sold at 4.3. And I sold at 5.5. And I sold at 5.9 was the last one where I exited. And then it dropped from 5.9 all the way back to 1.85. I was like, oh, perfect sell. And then it went from 1.85 again to 18. Yeah, it was a really nice trade. You trade ODT only? Mostly ODT. When I'm sizing up above 50, 60, 70,000, I'll probably go 1 day, 2 day to expiration. That was on SVX. It was this contract. Let me show you which contract it was. I think I have it. 1, 2. It was this contract right here, bro. Here, let me show you. So our entries was here. As you can see, it went from 1.8, from a smaller scale. It went from 1.8 to 2.2, which was like 120%. It was so fast, it dropped immediately. So this is where I sold the first half, I believe, at 3.2, 3.2 around this candle was around 80%, 90%. And then again, I sold at that $4 level. And then it dropped back into kind of break even. But as it was accumulating, and then I sold the majority again here at this 240%. Here at $6. I sold the rest. I got excited. I sold here. It came right back to break even, and then went from 1.8 all the way to 19, giving us a 946%. But because I didn't hold to 946%, I'm not gonna tell you the contract went to 940%. I held to the 6.4, pretty much was the high that I saw on the last contract. I sold it. And if I had held that last contract, I would have probably made an extra 1,700. But I'm content with the play I caught. It was a fantastic, beautiful play in my opinion. And yeah. Did you post it live in Discord? No, this one was too fast. Actually, we traded it live. We were live on Discord together. How do I join your Discord? Everything is posted if you go to any of my social medias. I'm not here to promote any of my social media, if I'm being honest with you, any of my services. But if you want anything, you can click the link on any of my bios, and all the information is there. Awesome. I'm actually excited for tomorrow's class. I'm going to watch it with you guys. Thank you for having it. Did anybody use that 443 today? Anybody, use it or trade it? Oh, a lot of you did. Nice. How much percent did you guys make on that trade? Bro, even if 40%, 90%, Tesla 271, 100, 300%, 15%, 150%. Bro, even if you made $10 or $30, listen, for the person saying I made $30 off my ass out, bro, you made $30 from joining a free class. That's absolutely nothing. Green is green, bro. You're investing your time into your education, and as time goes on, bro, those $30 goes to 300, goes to 3,000. It's a learning process. I believe, nobody's a master in this market. You're always a student of the market. Tomorrow, I'm gonna sit here. I'm gonna sit my ass down. And I'm gonna learn with you guys gamma and Vanna exposure. I believe I'm good at time and sales and dark pool, but I'm nowhere near a master. So every day in this market, I learn something, and tomorrow I'll learn. Traded NQ future with that DP level, made $1,200. There you go, my brother. Congratulations, bro. You can trade NQ every single day with DP levels and make more money. But that's actually a really nice comment. You just made my fucking day, bro. Thank you so much. Awesome, guys. It is 9:45. I need to go to the gym or my trainer is gonna absolutely murder me. But I will see you tomorrow, and I hope you learned at least one thing. What year did you start focusing on level 2 and time and sales? 2018, 2019. I started dabbling into it. My pleasure, bro. You can call me Hassan, bro. No need to call me Rippy God. Just call me Hassan. What was your trading like prior? Prior, I was pretty much using mainly putting all my entries on EMA crossings. I was using something called stochastic slow. I don't even know what I was using, man. I was using something called Ichimoku Cloud. I started trading with Bitcoin, so I'm pretty much you use every single indicator you've seen this market that's in the market. I've used using indicators. I'll use sometimes I'll use the 200 and the 50 moving averages, to find the larger term trend directions. TTM squeeze, I used to use it so much, but now I can, with my eyes, I don't really need to add it on my chart. With my own eyes, I can tell when something is squeezing. It's basically when volume is coming down and where price is consolidating. I don't need the indicator to tell me price is consolidating. But when you're a beginner, it definitely helps to understand when price is consolidating so you can avoid to trade that setup. Why did you transition? And did you take way less trades? You know what? The reason I transitioned into time and sales is, and dark pools and more on the quantitative side because I wasn't making any money on the other side. You know, when you're simply just using uh, EMA crossings and you're basing everything on a line crossing, sure you'll make a little bit of money in the beginning. Eventually down the line you realize, shit, I'm not making any money. How long did it take you to be consistent? And what was the moment that changed your trading? I would say for me to be consistent, I would say it took me roughly 4 years. And I'm not saying in those 4 years I was never profitable. I would have runs where I was profitable. I would have runs where I was completely negative. It was kind of an up and down thing. After 4 years, the thing that really changed for me was risk management. Like I focus a lot on risk management. How do you control your emotions like fear or tilt after taking a loss? This is actually what I'm doing at the moment. Everyone tell me, why don't you size up? Why don't you size up? Because I'm afraid that I'm about to go crazy and go on tilt. So I size down my account and I trade light till I'm ready. How long have you been training with dark pools? I would say about a year and a half now. Yeah, a year and a half. Do you enter your trades with a stop loss or do you manually just sell it by looking at charts? Depends. Sometimes, you know, if I'm sized in with a larger position, I'm gonna have a determined stop loss or an area where I'm gonna sell. But most times I'm looking at certain levels and I'll scale in slowly. You ever trade off fundamental analysis or macroeconomics? Listen, bro, from a fundamental perspective and macro analysis perspective, uh, that's why most economists are probably one of the most poorest people. It is easier for me to sit down, look at time and sales, and determine what's going to happen in the next 10 minutes, as opposed to looking at a chart and telling you what's going to happen in the next 10 months. So I'm a day trader, I'm a scalper. I only care what's going to happen in the next 10 minutes. When I'm buying, when I'm selling, I don't care what happens after, I don't care what happens before. So for me to get less of a headache for my own self, I don't use any, I don't look at the macroeconomic views of things or fundamental analysis view of things. I look at the quantitative side though. Risk management has been the greatest thing I've ever taught myself. Bro, risk management is a journey like no other. For me, it's a journey like no other because I am impulsive. I have an addictive personality. I am all of the above, bro. I used to have absolutely no discipline. So for me, risk management really changed the way I look at this. I mean, it is pretty much the heartbeat of all trading. Would you be able to share some of those recordings you were saying you studied at the beginning, time and sales, live charts, so we can study as well? So the old recordings, bro, the old recordings or in a journal and in a laptop that is no longer alive. I mean, it's back in the Middle East. I mean, if I go to the Middle East, I'll gladly come and post it for you. Most of retail loses money, and all of them are technical traders. Yep. If you could go back, what would you tell beginner Hassan? I would tell him it doesn't get any easier. You know, make sure to understand what you're getting yourself into. I'll be honest with you, bro. I did not expect trading to be like this. I swear to God, I didn't expect trading like this. When I first started, I just wanted to get rich fast. I did not expect it to be like this. It is a journey like no other. It is a journey that teaches you a lot about yourself. Uh, During the journey, you'll probably go a bit crazy. You will go crazy. I'm not gonna lie to you. So what I would tell myself is be patient, bro. Trust the process, be patient. Uh, this process is probably one of the worst processes you'll go through in your life. There is nothing easy about trading. Anything you see on social media where it's larger gains or whatever, just know that this person is on maybe chapter 10 in his trading career and you're at chapter 1, and don't compare yourself to anybody. I know you see me post those large gains. I promise you, bro, that comes with after 8 years of hard work and insane emotional management control. It comes with a lot of hurdles from a mental capacity level as well. That's why, I can't size up every day because you gotta understand, it's all hit rate. If your hit rate is taking a hit, sizing up is gonna destroy you. When watching an inside day level with the tape, what's your key you're looking for, or do you wait for a retest? And what's your key beside the tape that the move can be so fast? What do you look for? I'm pretty much looking for the same thing I showed you today. I'm looking for imbalances. I'm looking where the imbalance is headed. Is it more sell on the buyer side? Is it more on the seller side? And I'm also looking at the notional value of those imbalances. Or is the notional value more leaning towards, the buy side or the sell side? Do you think that forex traders who 50 to 1,101 trade are real? Bro, this is these type of trades, these type of posts is to reel you in. If I go and I post that I'm going to turn $50 to $50,000, I'm going to get a lot of people that have $50 who are going to come and join me, and we're going to make money a little bit. But I'll be honest with you, for anybody that can turn 50 to 50,000, you got to understand it takes a lot of risk, it takes a lot of full port, and it takes a lot of luck. So maybe you'll find one guy that hits it. I've hit it in the past. I've done it in the past. Maybe one out of the 10 times I've said I was going to do it, maybe one of them hit, but it's gambling. It's the definition of gambling. What do you consider proper risk management? Risking 2 to 3% on a port per trade. Proper risk management for me is different because I look at it as what's in the portfolio, but also what's in the bank. So when I'm looking at risk management, when I'm entering trades, some trades I'm sizing them for zero, other trades I'm sizing them, with a 20% stop loss in mind. And when I say sizing for zero, it's the same thing as like if I go and I say I'm gonna put $1,000 in this trade and I'm gonna put a 20% stop loss. Sizing for zero, saying I'm gonna go put $200 on this trade with no stop loss. If both those positions get stopped out, if on the second half it goes to zero, I lose $200. If the first one goes minus 20%, I also lose $200. The reason I like to go more close to the size for zero method is because for the size for zero, I'm not gonna hold to zero. I'm not gonna hold anything to zero. I'm just sizing it for zero. If the play is invalid at minus 30%, I'm probably gonna exit. But sizing everything for zero is gonna minimize my losses. It's gonna remove the element of emotional control. For me, that number is like $100,000. When a position is above $100,000, the emotional control attached to it is fucking insane. You go down 10,000, you go up 10,000, you're very emotionally attached to that position. So sizing it and putting 20 grand instead of 100 grand in it, I'm not gonna have I'm gonna have complete emotional control over the position because I'm willing to lose 20,000. I'm not gonna hold it to zero, but if it goes, minus 50%, I'm gonna take a $10,000 loss as opposed to a $50,000 loss on the other position. So when it comes to risk management, the way I look at risk management is a little bit different. Because I'm looking at it also from a hit rate perspective. But ideally, you wanna not risk more than 1 to 3% of your portfolio. But if your portfolio is at $1,000, you're limited. If your portfolio is under like 10,000, 5,000, 1,000, you're more limited, and you have to take a little bit of risk in the beginning. So it all depends on the environment. So, I actually, in my mastermind, I have like a class that's like 2 hours and a half long about risk management. So, what important key levels do you need as a scalper? Open print is one. With scalper, it's speed. If you're a scalper, bro, invest in this, buy this. This is not sponsored or anything, but it's a stream deck. If you're a scalper, Stream Decks is incredible, or Hotkeys is amazing. Basically, when it's connected, you see buy, sell, buy, sell, buy, sell, and you just click buttons, buy, sell, buy, sell, buy, sell. Yeah, the speed is the most important thing as a scalper because you want to go in and out as quick as possible. As a scalper, understanding the tape will also help you because if you can determine quick imbalances at certain levels, you can catch like 3, 4, 5 points very, very fast. Do you often trade things other than SPX and NQ? Yeah, I do trade a little bit of a Tesla. I trade a little bit of NVIDIA. I like to trade the stocks when they have volume, bro. If they have no volume, I don't like to trade them. My biggest struggle is psychology and trusting what I see on the charts. Can you share your insights or breakthroughs you've had psychology-wise before becoming consistently profitable? This goes back to that risk management. It's that sizing for zero mentality. Having complete emotional control over the position. A lot of traders, man, they sell too early, they sell too late, they buy too early. If you're in the beginning stages, if you put the position, how much you're willing to risk. So when you go $1,000 with 20% stop loss, you're basically willing to risk $200. Put that $200 and watch the play out. Understand, as you get better with trading, that number will increase, the sizing will increase. Not every single play is going to be for zero. But if your biggest struggle is trusting what you see on the charts, it's not trusting your instinct, not trusting your, it's because your sizing is too heavy. The only way to combat that is to size down. Most people don't want to size down. So size for zero doesn't mean you have to hold for zero. We're just sizing it for zero just in case the play doesn't work out in our favor. If the play works out in our favor, we can always add to the position. Or a lot of people be like, okay, yeah, I go $1,000 in the position and I sell at 5%. I always sell too early. At least now with a 200 position size, your risk is already known. You know exactly what you're going to lose. The max you can lose is $200 if you decide to hold to zero. But now that it's green, you can actually hold it about 5%, 10%. You can give the fucking trade some room to breathe, to work out. Thank you all so much, man. I'm gonna do another probably question session where I can kind of go in a little bit more depth. But thank you all for coming here. I actually have to go to the gym. I'm late to my gym meeting. I actually went over a whole hour. I apologize for that, but it's all good. I will see you all tomorrow, but I'm not gonna be teaching the class. It's gonna be more Sheen and Geo. It's gonna be a great class. I think you guys will enjoy it. And thank you all for coming. And I apologize for the crazy stuff that happened in the beginning. And I will see you all tomorrow. Have a wonderful day, guys. Goodbye. Thank you all.